Good morning, good afternoon, good evening, depending on where you're watching from. It's the Forex Hubber. As I had promised to upload a video that is detailed concerning the different types of order blocks, the different order blocks to me that I consider the true or valid order blocks. And I've tried to come up with different structures which I'm going to explain to you. There are a few of them, there are not so many. We are going to go through them to easily understand and spot these different order blocks. But before we get there, let's try to come to look through the properties or features, or call them characteristics, of order blocks. I just mixed them up. I didn't really arrange them in order, but I'll try and simplify them for you. An order block, to me, it's a start of an impulsive moves. A start of an impulsive move. When we get back here, these are what we term as impulsive moves, the strong moves, the buy or the sell strong moves. Those are what we call as impulsive moves. You get me? At the same time, an order block is the last candle above or below that created inefficiency. The last candle above or below that created inefficiency. Inefficiency, these are the gaps created during those impulsive moves. Order blocks, the other property, an order block normally leads to a break of structure or a change in character. A break of structure or a change in character. Normally, each time you see a break of structure or a change in character, there should be an order block somewhere which is valid. You get me? We are going to look through them. An order block should be unmitigated, and several others. Let's get to the video straight before time runs out. So this, to me, I try to come up with different structures. Now, normally, people make mistakes when they come to identifying an order block in the different candles, in the different moves in the market. When you look at this first structure that I drew here, most times, most people identify this just because someone has been told the first or the last candle is an order block. They normally go with such things. The first or the last buying candle. So when someone says that this was the last buying candle before the drop, they normally choose this and identify it as an order block. It is wrong, my friends. It is wrong. This is not the last buying candle if you're critical, because if it was the last buying candle, we wouldn't have this strong wick that crossed through it. So when you're identifying a valid order block, if they tell you the last or the first buying or selling candle, this is what we mean. So if in this term the last buying candle is this, it is this that you see here. Do you see that candle? Do you know why? Because this wick that you saw that crossed through this candle implied that this was the last buying candle. It grabbed liquidity, meaning it is a valid order block, not this one. That's why most times when you identify this candle as your order block, normally this is what happens. You will find the market has come to respect your order block and instead stops somewhere, respects this one and drops. So your orders that you placed around here are not taken out. They are not bought. You get me? So let me hope this has been made clear to you. Never make that mistake again. always identify that this is not the last buying candle. If it was the opposite side, it is not the last selling candle. As long as you see liquidity was grabbed either above or below, if it was the buying one, because this is now, we are now going to sell, you get it. So you have to spot it very easily. As long as liquidity grabbed it, this now turns out to be the last buying candle, not this one. So this one, let me actually change it. Let me change it to a different color. So this is the last buying candle. So next time you're to analyze, always identify that. And we said an order block should be unmitigated. Do you get me? Unmitigated. Actually, if you're critical, this that you had spotted, most times people spot such, this was already mitigated because this candle came and mitigated it, then it dropped. But now look at this candle here. This candle, the last buying candle, which we spotted, was never mitigated. There are no other candles that came to grab liquidity before it dropped. It rather left the space hanging, which we termed as inefficiency. Inefficiency is this. Now, these are, this is what we term as inefficiency, the gaps. Do you get me? This. Sorry. Sorry. Inefficiency, these are the gaps here. So this gap you see here, it made a proof to us that this is a valid order block. This one, it had the strong impulsive moves, these sell moves, they are very strong, and then it created an inefficiency, which is the gap in between here. Some of them call them as the fair value gaps. So once you spot such things, and the other thing, there is a feature whereby I didn't explain it to you, but this last feature, an order block that grabs liquidity under or above has an added advantage. So this order block here that we spotted, this one, grabbed liquidity. If we happen to delete out this for it to actually be clear, this order block here grabbed liquidity here of this last candle. Do you see this last candle here? They grabbed liquidity. This candle here grabbed liquidity before it dropped. So this terms it as the high probability order block. Then created inefficiencies and it dropped. So let's go to another one. Now look at this one here. It's very clear. Now if it's the last buying candle, for this case you just spot it easily. This is the candle right here. Right here. That's the last buying candle. Reason, it took out liquidity before it, and it is actually the last. This other candle never went through it. This candle never took out liquidity above it. So meaning this was the last candle which took out liquidity before it, and it dropped. At the same time, it created inefficiency. There is this gap here that you see clearly, that's some good inefficiency. This do you see that? That's some inefficiency, some gap that was created, a fair value gap. So grabbed liquidity, made that strong move, then created these impulsive moves, the strong drops, of which it left us space around here, which made it valid for us. Let's skip there. Let's come to this. Look at this, the start of an impulsive move. In this case, if you're to, most people will spot this as the start of an impulsive move, but it would make much sense if you considered this candle, the first candle before. Reason being, chances are high for this market to come, reach here, change direction before it comes down here. So this is the same case as this one here that you saw here. So put that in mind. Let's come here. Now, for this case, if you're to compare it with this one, this is very clear that this is the last selling candle, this, before the market changed direction to go up. So this is the last selling candle, this one. It grabbed liquidity. You see this? There's some liquidity grabbed here, making it a valid one, and there are these strong impulsive moves, the inefficiency as strong as, you know, this alone implies the market is going to come back, confirm with your spotted order block, then it takes you move with it. Check out this. Like we said, I think now you're very familiar. This is not the last, it's not the last buying candle, but rather it is this. It is this. This is the last buying candle. Now check out this. We also have another candle here, which you can see it can be an order block at the same time. But if we consider the properties that identify a true or valid order block, we said it should have grabbed liquidity. If you look at this candle here, it never grabbed liquidity in the candle before it. So this seizes it from being a valid order block. If you look at this candle right here, it grabbed liquidity in this last candle before it, the candle before it grabbed out its liquidity, and it created a strong inefficiency which made it to be a valid order block. However much this one also created an inefficiency, but it never grabbed liquidity. So this has almost all the properties we are looking for, which signifies that it's the most high probability order block. Let me take you quick to the structure, and we look at it, the live markets. Now let's look at this. Look at this case in point. This is gold against the US dollar. Here we had a strong drop, and we were sure that if you're critical, there are some order blocks that I went spotting. Do you see this first order block here? Do you realize why the market, when it came, it never triggered it? It just deceived you by making a slight drop, then continued upwards. Do you see this order block here at the same time? It also did what? It just penetrated through it, and there is a valid order block here, right here, which confirmed with it, and it dropped. Why do I say that it's valid? This is a daily time frame. You clearly know what this means on a daily. It's a very strong move, very strong. Reason being, if you look at this, it created a strong inefficiency, yes, which was good, but it never grabbed any liquidity before it. Check out this. Yes, it created an impulsive move, but it was mitigated. This candle was already mitigated. This actually grabbed some liquidity if you change it to a lower time frame, and it created a strong impulsive move which left a strong inefficiency gap here. Do you get it? Giving it a high probability of becoming our valid order block. And indeed, when it came and hit on it, it reacted downwards, and you would have grabbed some good pips down here. Let me take you to another one. Sorry, my subscription had expired, but that can't stop us from continuing with our video. Check out this. Let me make them a little bigger. This is a New Zealand against the Swiss franc. Look at this. Sorry, my network is a bit slow, but let's give it a few seconds. So sorry about that. It is taking long to get back to our market, but let's give it a few seconds. We are back. So check out this drop here. It clearly gave us some. Do you know why I actually considered this? How do I even come up with this to identify this? This was a down, a drop, a down move, and if you're critical, we had what did I tell you here? If you remember the properties, we said must lead to a break of structure or a change in character. And if you look here, this is a break of structure. If someone could label it, you could just say BOS, a break of structure. Once there is a break of structure, I told you, always look before it. You'll find valid, strong order blocks. And then now start considering the properties that we've talked about to identify the good ones that you're to spot. Check out this. This is an order block actually. Here is an order block, but it never reacted on it. It came, yes, made a slight reaction. So this was just fooling those ones that entered from here. And look at this order block here. At the same time, it's a good order block, but if you're critical, it was already mitigated. Are you seeing this candle here? It was already mitigated, so it ceased from being a valid order block. So we leave this out. There was another order block, this last candle. Are you seeing that I took out the red candle as the last buying candle because it grabbed liquidity before it, created an impulsive move, and we had a fair value gap around here in between. This is a 1 hour time frame, and if you're critical, when it came, took out all these ones and reacted with this order block, then it dropped. Let me hope you're understanding this. Take another look on this very pair. So check out this. This is an order block which never grabbed liquidity. Yes, it came, reacted to it, dropped, continued dropping. You would have grabbed some pips around here, but when it came back, tried to react, and then it broke through to this other order block. Do you see it here? This other order block. It also reacted slightly through it. Then it came and confirmed with the extreme order block. I will actually upload to you a video where if you find such order blocks that almost have all the properties, but when they are almost close to each other, chances are high we are going to consider the extreme order block, because it will give us because now this to someone who understands the market, this can be considered as inducement, just fooling around with people, and majority of the people would have entered here, and then it comes, reacts slightly, then it takes you through, it grabs all of you and your stop losses, takes your money, then reacts to the extreme order block right here. So this is very crucial to consider when you're trading. Otherwise, let me hope this video has been helpful. If there is something you've not understood clearly, please ask. Please do share, subscribe, and let's learn together. Comment, like, click that notification button. I'm here to try and share my knowledge with you on how I spot best how I make best entries in this market. And I'll be sharing all my simple analysis and the advanced ones with you for you to try and pick and understand that these things are doable and we can harvest money here. So consider these things when you're entering the market, that when you're spotting order blocks, that order block must be unmitigated. It must have created an impulsive move. It must be the last candle above or below that created inefficiency. So always look for the inefficiencies in the market. Look for those inefficiencies, the gaps. First of all, consider the impulsive moves. Impulsive move, I simply mean this. Do you see these impulsive moves? These strong drops. That's an impulsive move. Now start considering again these other properties. First of all, look for the impulsive moves. Are they somewhere? Look at this strong impulsive move. Look at this. It actually reacted to it slightly, continued for some reasons. If you actually spot them easily, you'll be simplifying these things very easily. They are not that hard, and we can do them. You get it? These strong impulsive moves, I look for the inefficiencies. Make sure these things are on your fingertips when you're identifying order blocks. They are very easy to spot as long as you know exactly what you're looking for. So must lead to a break of structure. Every time you see a break of structure or change of character, look for the order blocks. They must be there. Look for them. Those order blocks actually that I've showed you, they can be applied on a 1 minute, 2 minute. In other words, it can be applied on both the lower and the higher time frames regardless. So they don't only apply, because if you're critical, I showed you the 1 hour, the 1 day, and different time frames. So it applies even on the 1 minute, 2 minute, 3 minute, 15 plus. Any. Just understand them, the properties, and how to identify them. That is it. This remains to be the Forex Hubber. Take time to subscribe, comment, share, and ask anything you feel like. Thank you. Have a blessed day, blessed evening, and a blessed morning, depending on where you're watching from. Thank you. Till next time.